So you want to buy a house in this crazy market and you're kind of scared, or you've tried to and you're getting a little buyer fatigue, a little tired. Maybe you've put in offers and you've lost out and it's been an emotional roller coaster, or maybe you're just thinking about it and you're like, am I crazy? Can I even get this done? Is it possible? And that's exactly what we're going to cover in this video. So we're going to go through 10 things that I know will absolutely ensure that you can buy a home and that you win and you get your offer accepted in this market. And we're going to get after it right now. Hey, if this is your first time to the channel and you want to know everything there is to know about eating, sleeping, working, playing, the good and the bad of living in Atlanta, Georgia, or in this case, how to get your offer accepted, well then subscribe below and ring the bell for notifications so you can be the first to know of the current market here in Atlanta. My name is Denny. The team and I get calls each and every day from people just like you looking to make the move to Atlanta, and we absolutely love it. So whether you're moving in a week, in a year, or anytime in between, call, text, email, schedule a Zoom. We'd be happy to help you make a smooth move to Atlanta. As I mentioned in this video, we're going to be talking about the 10 things that you can do to get your offer accepted to win a home in this crazy market. Before we dive in, I want to talk about a thing we call in the industry. It's called buyer fatigue. So maybe you're just starting the process or thinking about starting the process, and man, are you lucky that you get all this information at the front end before you start. But you could possibly have already be working with another realtor. Maybe you've been in the market for a few months. Maybe you've put in a bunch of offers and you can't quite win. And maybe it's just not working for you. And first I would say, well, the things I'm going to share, if you have to share this with your realtor, then you probably need a new realtor. But these I know will work. And so buyer fatigue is just that. It's when you've been out in the market, you've been on the emotional roller coaster, you've put in a bunch of offers, they haven't got accepted, and you're just tired. You're tired of getting your hopes up. You're tired of the time and the energy and the effort. You're tired of looking. You're just tired. That's buyer fatigue. And that happens to a lot of people in this market. We have been fortunate that our team has done an amazing. Do we win every offer? No, that would be impossible, right? We can't control all of the circumstances. But as it relates to the industry as a whole, and here in Atlanta, our team does a phenomenal job at getting our buyers under contract before they get worn out, and many times on the very first offer. We had a not a first-time home buyer, one of our clients a few weeks ago, very limited budget, under $300,000 in Alpharetta. Yeah, that's a challenging market. Was able to get her under contract on the very first offer she made, which we're super stoked about. And at the other end of the spectrum, I'm personally buying a house right now. And, you know, we've been looking, my family and I have been looking for the perfect forever family home for years and years and years. Finally found it in this crazy market. And when I found it, was able to get the first house that we made an offer on under contract and accepted immediately. So I've done it for myself. We've done it for our clients, lots of them, and would love to help you. So now that we understand what buyer fatigue is, let's talk about how you can win that home in this market. Now, listen, I'm not saying that you need to do all of these every time, or that these are necessarily make sense for you in your situation. My disclaimer is that every person, every transaction, every property is unique and different. And that's really where it comes into working with someone who can help you structure these offers properly so that you get them accepted and that you don't do anything that's going to jeopardize you or put you at risk, but what makes the most sense for you. So that's my disclaimer. But as I go through this, these are very common, not just for me, but I'm connected to thousands of real estate and tens of thousands of real estate professionals all over the country. And we're having these conversations on a regular basis. So we're going to go through these top 10, or these 10 things that you can do to win. 10 to win. Number one is be decisive and move quickly. See, if you've if you've bought a home in a different market where you could take your time, where you could think about it, where you could look at other homes, where you could do all those things, this is really not the market for that yet. I often joke when someone says, can I think about it? I'm like, well, or can I sleep on it? I'm like, sure, you can sleep on it, but you won't be sleeping in it. In other words, you can think about it overnight if you want, but it's going to be gone tomorrow. And so in this market, you really got to understand what you want and know what you want. And when you see it, you got to act. The buyers that I see struggling are the ones that are wishy-washy or don't quite act quick enough. They're not wanting to make a decision. They're not wanting to put their best foot forward, and that ultimately costs them. So you got to be decisive, and you have to act quickly. The second is cash. And I'm not saying you have to pay cash. There is a lot of investors and buyers, whether it's big funds that are paying cash for investment properties, whether it's buyers relocating from California, New York, the Midwest, Chicago, and they've sold their properties that had a ton of equity and they're coming with a ton of cash to the Atlanta market. Like, that does happen. So knowing that you are competing with cash, if you can't do all cash, well, then you need to be like cash. And what I mean by that is you need to go ahead and get fully underwritten with a local lender, not just a pre-qualification letter, but go ahead and submit everything that they need, go through the full application process and get fully underwritten and fully approved so that your offer is like cash. It is as strong as it possibly can be, even when you're using financing. And that's going to really give the seller confidence and the selling agent or the listing agent confidence in your offer. Next, number 3 on the list is going to be a minimal due diligence period. In a normal market, you can get away with 7, 10, 14 days where you can get an inspection, you can review the inspection, and then after the inspection, you renegotiate based on what you discovered in the inspection. And that's in a normal market. This market is very much minimal to no due diligence. So 0 due diligence would be 0 days, which means when you're making an earnest money deposit, that would be non-refundable right up front because you're not doing any due diligence. Now, if you are going to have a due diligence, minimal would be like maybe 3 days, 5 at the most. 3 is probably ideal because in this market, listing agents and settlers, the home goes on the market on Thursday. Maybe they show it through the weekend. The deadline to submit offers is maybe Sunday or early Monday. They review them, they accept it on Monday. So if you have a 3-day due diligence, Tuesday, Wednesday, Thursday, they should know by Thursday whether or not that home is under contract or whether it needs to be back on market. And so you're really working within the constraints of how rapidly this market's moving. So little or minimal due diligence, and you can still get an inspection, but that inspection is really going to be used for your information, not really for renegotiation. If you find out the house is falling down, it's full of mold or full of termites or structurally not sound, well, that's one thing. But if there's just, some minor things that need to be addressed, nothing major, well, then you're really just getting that inspection for peace of mind. It's not really to renegotiate. So minimal due diligence. 4th on the list would be a large earnest money deposit. So earnest money, typically, you're putting down around 1%. So if it's a $500,000 house, you're doing $5,000 in earnest money deposit. That earnest money is applied towards the transaction at closing. And then during that due diligence period, we talked about 3, 5, 7, 10 days, whatever it is. Well, then if you change your mind for any reason whatsoever, then you get the earnest money back. In that time frame, it could be something you found in the inspection, or it could just be you decided to do something else, which is another reason why, by the way, a lot of sellers are hesitant with out-of-state buyers. Like our team's the best relocation team in Atlanta, and so we do this all the time. But a relocation buyer, right? The seller's thinking like, have they even seen the house? Are they gonna get it under contract and look at it and then back out? And so that's why we talked about the minimal due diligence. But the earnest money gives them more confidence that you're going to follow through and that you're going to close because you've got more skin in the game. And so instead of 1%, $5,000 on a $500,000 house, maybe it's $10,000, $15,000, $20,000, $50,000, whatever it is, right? You're putting that up in earnest money. And then after that 3-day due diligence or the 0 due diligence, whenever it expires, that money is at risk, right? And so you don't want to just do this casually. But if you're working with the right realtor and the right team and the right property, and it makes sense for your situation, there are times where this makes it as strong as it can be. If you're fully underwritten large earnest money down payment, minimal due diligence, and a lot of cash up front. I mean, that's pretty fat. That's pretty close. That's pretty close or competitive to cash. Number 5 is a fast closing. And so again, if you've gone through all of the underwriting and you've got all your ducks in a row with regards to that, well, then instead of your typical 30, 45 days, if your lender's already done all that on the front end and it's really just the property and the title work, in the details and the appraisal and that kind of thing, which lenders can put a rush on it. My lender gets appraisals back, in under a week, 5 business days. I mean, so you're talking about if you can close faster, well, then again, we're back to the light cash, right? Everything really comes into being light cash. It gives the seller confidence that it's gonna close, that it's gonna work out, and then you're gonna get there sooner than later, and they can get that money in their bank account and they can move on maybe with their house hunt. And so the faster you can close, that tends to be more appealing as well to sellers and listing agents. With time comes risk, so it's really minimizing the time risk of the transaction. That leads us to number 6, no contingencies. And in the contingencies, I'm talking about definitely not contingent on the sale of your home. That is a non-starter in this market. In some markets it works, in this market it does not. And so you need to go ahead and list and sell your home, or at least get it on the market. We have great connections and a great network of amazing agents all over the country. So if you need a referral, let us know. We'll connect you with someone I know will knock it out for you in your local market on the listing side, and make sure that they structure it properly so that it gives us time to get you a house on this side. And we'll talk about that here in a minute too. But essentially, you need to go ahead and sell your home. So not contingent on the sale of your home, also not contingent on financing. Again, this is why it's so important that you go ahead and get fully underwritten, so that that's not a risk. If you haven't been through underwriting, it's a big risk. It can be risky that you might not get approved, even with the pre-qualification letter. But if you're fully underwritten, well, then there's very little risk. And that gives the seller confidence as well. And then even like appraisal contingencies, your realtor should have their finger on the pulse. They should have a good idea as to whether or not this property is going to appraise, and they should be able to help you with that. But a realtor is not an appraiser, and there's always risk that the appraiser had a bad day. And it depends on, are you using a conventional or FHA or VA, or what kind of loan product? Is it jumbo? Is it regular or conforming? So all those things matter, but ultimately that appraiser is a human. And so they do make mistakes. And oftentimes your realtor can go back and produce supportive evidence or other comps and build a case for why the appraisal needs to be at a certain spot or come in at a certain price, and they can work on your behalf. But not having an appraisal contingency, again, just gives the seller more confidence that this is going to move forward. And if you've done all these other things, then they're feeling really good about your offer at this point. And that's going to lead me to the next one. I think it's number 7 on our list, is an appraisal gap coverage. And so the appraisal may or may not go through. And if you have an appraisal contingency, you can renegotiate based on that. Sometimes you lower it to the appraisal. Sometimes you just pay the full gap. Sometimes you meet in the middle. Without that appraisal contingency, you don't have that discussion. But with this appraisal gap on the front end, you're telling the seller exactly how much you're willing to cover on that appraisal gap. Is it the full gap? Like if it's 10,000 less, or the appraisal's 50,000 less, like you're just going to pay the difference. Now you'll need to talk to your lender to see exactly how this works out. But here's the short version. If you're putting 20% down on your purchase, and let's say you're buying a $500,000 house, so that's $100,000, and then your contract price is at $500,000 and it comes in at $480,000. Well, when you put down that $100,000, $20,000 is covering that gap. $80,000 is a down payment. So now you no longer have the full 20% down. So then you might have PMI or mortgage insurance, so it affects all of that. But or if you were planning on doing 100, you could just pay the extra 20,000 to make sure that you still get to that 20% down or 3% down or 5% down or 10 or whatever it is that you're doing, borrowing. But essentially that appraisal gap coverage is just giving the seller confidence, like, hey, even if this appraisal comes in low, like I'm going to pay 5,000 over appraisal or 10,000 or 20,000. Now, this is probably a good time to explain the difference in overpaying and overbidding. Overpaying is like, it's just not worth it. And you're paying more than you should and more than anyone else would and more than that property justifies. In this market, prices are going up so fast and things are changing so quickly and things are so dynamic that sometimes the appraisals are not keeping up with the market itself, which can mean that you get a low appraisal, even if a price of property is worth it. And the market just hasn't, maybe there's another property or two in the area that hasn't closed yet, so they don't have that data. And so having said all that, overbidding, paying over the list price or paying more than other people, overbidding to win is one thing, overpaying because it's not of value is another. And so you always want to make sure that you're not overpaying, but overbidding is perfectly fine. And we're talking about this in the context of using an appraisal gap to ensure that not only you win, but that you close and the market will quickly catch up to that. So that's an appraisal gap. Next is what we call a temporary occupancy or a lease back. And so this is where you're letting the seller stay in the home for a period of time after closing. So a temporary occupancy, you could be letting them stay for free. I am doing this, the home I'm purchasing. We close on May 3rd and we're letting them stay there, temporarily occupy the home until the 16th, and we're not charging anything for that. If it's going to be a longer duration, you might do a lease back where they are paying you rent for a month or 2 months or 3 months or however long it is. And so just understand that this is what you can use on when you're listing or selling in order to buy yourself time to find the perfect property and to get through this process and to close on it so that you can move into it. And so you have more leverage on the listing side. And again, be glad to connect you with some agents that understand this and understand how to make it work to your advantage. But that is called temporary occupancy. That takes us to number 9, which is just, I think in all of this, what you're hearing me say is be flexible. Like, ultimately, if you want to win, you got to be willing to do what it takes to win. And that doesn't mean that you have to be completely bare your soul and take all the risk. But if you're smart about it and you're working with the right team and you've structured it properly and you can minimize the risk while still putting your best foot forward, flexibility just comes down to saying, hey, Mr. and Mrs. Seller, hey, listing agent, like, what do you want? Because not everyone has the same needs or desires or wants. Like, what are you trying to accomplish and how can we be accommodating to helping this be as smooth as possible for you? And that mindset when going into this is really going to serve you well if you're trying to win the house of your dreams. And last but not least, number 10, drum roll please, is you need a strong, local, experienced team. Real estate team, inspectors, appraisers, lenders, all of the people in the process, that all of them have to work together to make sure that in this market, you can be flexible, you can be decisive, you can move quickly, you can win, but you can do it without taking on unnecessary risk, whether it's time risk or process or transaction risk or any of that stuff. And so with that, you want a team that works together. You want a team that's local. You want a team where when the listing agent gets offers and they're reviewing them with the seller, they're like, I know these people. The house I'm buying, one of the reasons that it worked out so well is the agent that was the listing agent, we've done transactions together. And so she was very confident in me. And then when she found out that I was the buyer, well, I mean, obviously that becomes a lot more persuasive. And so the listing agent is going to be reviewing these offers. And in addition to your offer, you want the people representing you to inspire confidence in you and in your offer so that even if your terms aren't the best, the reason they call it highest and best is because sometimes it's the most money, sometimes it's the best offer, and sometimes it's just the most confidence, the best process, the best experience. And so if you're working with an experienced team with a strong reputation locally, they can make all of your life exponentially easier, the process smoother, inspire confidence in the listing agent, and ultimately get your offer accepted. Hey, listen, as always, if you have a comment, something that you've done or that did work or didn't work, a horror story or something that you want to share that would be of value to our viewers, please drop it in the comments below. Smash the like button. Give me a thumbs up if you got value out of this video. That is the kind of feedback that we welcome. If you are buying a home, whether it's next week or next year, anytime in between, call, text, email, schedule a Zoom, reach out. If you don't reach out, we can't help. The only way we can help is if you reach out. And so I promise you, if you think there was value in the information, we'll deliver 10x in terms of the experience you have with us in the Living in Atlanta, Georgia team. So until I see you in person, I hope to see you on the next episode.